How's it going, everybody? Thank you for being here. My name's Antonio, and you're about to watch or listen to a conversation that is general and impersonal in nature, one that will contain speculations about future events and forward-looking statements, and one that will constitute no financial nor investment advice whatsoever. I also have something to confess myself, and that is that I own shares of this company that I'm interviewing here today, though I have not bought any shares in recent past prior to this interview, and I will not be buying nor selling any shares at least 1 week after the release of the interview. That all said, Jon Bey of Standard Uranium is here with me today. Jon, thank you for investing your time in me, sir.
Thank you very much. Pleasure to be here with you, Antonio, and I look forward to sharing our story and answering your questions for your listeners.
Pleasure is all mine, because it's been a while, and also because I have an important question here. What's up? I mean, your stock is being dragged through the burning coals, hitting new all-time lows. Often, I'm down 40%, over 40% myself. So what's going on?
Boom! Right out of the gate, you slammed me with the hard question on what's going on. Well, look, the share price is down 40%. Overall, the macro story of the space is not great. With that being said, we're probably down a little further than many companies. But we are a pure 100% exploration company. And what we do is we go out and we explore and we drill. Now, we have a lot of our shareholders who are retail-focused shareholders. And look, if we don't have a home run drill program, the shares get hit a bit. So when we're drilling, the shares do well. When we're not drilling, they take a bit of a hit. And if we put out releases that aren't a home run, people see that as a selling opportunity. So look, there's a few things that I can speak to that as why going into 23 looks very favorable. But look, we are also not out there looking for small hits, small showings of radiation. We are elephant hunting. We are one of the companies that with the stuff that we're looking for in our project specifically, they're economic geology discoveries. That's what we're looking for. We're looking for the big home run hits. And we're exploring with incredible projects that we have. So we can get into that when we talk about the projects. But listen, look, we're not happy with where the share price is right now. Obviously, I'm a large shareholder as well, and as are some of my team members. And we're looking to make that share price move in the right direction and have a very strong 2023.
Okay, a lot of things to touch upon there. I was going to ask you about your strategy, about the oven hunting and the probability of doing that. So maybe we're going to touch upon that as well later on. But you mentioned yourself as a shareholder. You've been buying your stock, and yeah, I saw that. But sometimes you're buying as little as of like $160 worth of it. It almost seems, I'm not saying that it is, but it almost seems as if it's done just to have the SEDI filing look nice with a bunch of different buys in there. But what's up with that? Why are those buys so small?
They've got nothing to do with the SEDI filings. The SEDI filings are done because I'm forced to do those. I like to buy, I'm a shareholder in many companies. And when I take profits off any other company, I turn around and put that right into Standard Uranium. So sometimes they're bigger buys, sometimes they're small buys, but I just continually keep buying in the market. And sometimes we have days where there's very little liquidity. And sometimes I can just pick up shares at a small price. So I do that constantly.
Okay. Yeah, makes sense because it's a lower liquidity company. You're sitting at what? Probably 10 cents, 15 million market cap, something along those lines as of today.
Yeah, roughly.
Yeah, I have a thesis too. I don't know if I'm right, but I think I have a thesis as to why your share price might be lagging. Number one might be, and that actually might be coming later on as well, the overhang of the options and the warrants, because there's a few of those at least out there, but also sort of the inevitable dilution that small companies have to go through. Fair game. If you say you're an exploration companies, you got to go through that dilution. But for example, you've just recently decided to raise money at 11 cents, whereas your stock was trading at over 40 last year in the fall. So that must be painful for you as well. You also just announced, must have been yesterday, you announced that you'll be upsizing that private placement to 4.5 million Canadian dollars. And with it, what would that mean that I guess almost half of the shares outstanding will have been issued in the last 12 to 13, maybe let's call it 18 months. So
I wouldn't say half, probably closer to about 40% possibly. Yeah.
Yeah. But what's maybe, let's maybe talk about that specific private placement, the last one. What's that all about? What were you going to be spending the 4.5 million on so that you can create more value for me than what is being taken away by the inevitable dilution?
Yeah, so for sure. So we are an exploration company and we explore, and exploration is expensive. So we have, we've got 5 projects, and we are going to be exploring all 5 of those projects in 2023. Now, last year we had a drill budget of around $7 to $8 million, and we went through that. We spent majority of that on drilling. So you can see the drilling we did at our Sundog project was just over 2 million, and then we drilled at our Davidson River flagship, and that was closer to 5 million. So about 7.5 million of drilling. And that's going to be same going into 2023. So we're going to be drilling our Sundog project starting right away in February, March. That's going to be a $2.5 million drill program. We're going to be wrapping up the year at Davidson River, probably another $5 to $6 million drill program. We're getting bigger and bigger programs. And then we've also got 3 other projects on the eastern side. And we're going to be going to those ones and drilling those for the very first time. And we've got about $1 million in earmarked for drilling those targets. And basically, that's a lot of money in drilling. And when you drill, you have to spend. And if you have to spend, you have to raise money. So listen, the markets go up and down. Sometimes you're fortunate where you're at a share price that's its all-time high and you can raise at less dilution. Sometimes, no fault of your own, the markets are in rougher shape, but you still have to raise a bit of money to move forward. Look, I'm not going to go out and raise $15 million when our share price is at 11 to 13 cents, but I've got to put enough in the bank that I know we can guarantee our next drill program will be paid for, and I can go into that drill program knowing all my vendors will be paid. When you're lining up drill programs and your vendors and your First Nations and everything, it's a lot that goes into setting up a drill program, and you can't go out trying to plan that hoping you'll have money down the road. Sometimes you have to raise money at prices of where the market currently sits. So listen, that's the way it is as an exploration company, as a CEO and as a shareholder. Look, I know it's not great to dilute as much as we have to at times, but other times we've got to make sure we've got money in the bank to do our drill programs. We're not going to sit back and just do nothing and wait for 6 or 8 months, because lots of things happen if you do that. Number one, your story's lost and your story goes away. Number 2, you lose your relationships with your vendors, your drillers, your First Nation stuff falls apart. You've got contracts that you've got to fulfill. So you've got to always make sure that you've got money to move forward with those programs and keep all your vendors and all your relationships strong. And that goes as well as on the banking side and the investment side. You can't, walk away from the investors and relationships you've built over time. You want to keep those people informed, keep them know what's going on, and you want to constantly be giving them opportunities to participate in financings with the company as well.
There's a Dutch saying, out of the eye is out of the heart, meaning if people don't see you, they're going to forget you. You do get some perks from the Canadian government. They can be double-edged swords too, by the way. And I'm talking about flow-through shares. Exactly. Are you mindful of who's buying your flow-through shares, by the way? Because if they get into the hands of people who are they're looking just for a tax benefit instead of a long-term speculation, you can end up hurting your share price. So do you know who's buying those flow-through shares and their intentions towards the company?
We know exactly who's buying them. We try to keep our list of who our flow-through investors are pretty tight. Look, we work closely. It's no surprise to many people. We work very close with Red Cloud Securities, and they're very well connected to all the institutional funds in Canada, primarily all the flow-through funds. So when we go back to the market, we'll revisit those same institutionals, and we will give them the opportunity to participate in our flow-through raises. Now, that being said, it's not a slam dunk. You have to convince these institutions that you have a good investment opportunity and it makes sense for them and their shareholders. So we're very fortunate that we've got very strong relationships, and a lot of those same institutional funds continue to participate in each of our raises. So look, the last few months have been brutal in the markets macro-wise, but we've been able to go to the markets, announce our capital raises, and upsize. Not only complete the raise we wanted, but take in additional funds because people believe in what we're doing and where we're at. And they see this share price as a great opportunity to join with us right now.
I'm glad that you're mentioning Red Cloud Securities there, because that's reminding me of something that I found by browsing the internet and sort of looking at what people say about Standard Uranium. I came across what I thought was some valid criticism in relation to your marketing efforts and expenses. Now you've closed off your fiscal 2022 on April 30th this year, and in your financial statements, I saw that you've spent nearly $280,000 on investor relations. That's up quite a lot year over year. That's just without counting the conference expenses and potentially, I don't know if that's true, I haven't done forensics on it, but some marketing expenses might have ended up in your G&A too. what's up with that spend? Like, sort of, what's the strategy there? Why are you spending so much money, and what's the expected return for shareholders on that $280,000?
So $280,000 may sound like a lot of money, but it's actually very small. We know many of our peers that spend 2 to 3 to 4 times that easily. So look, we do a lot of our own in-house marketing. We have our own videographer, our own editors. We film all our own stuff. We use the majority of our stuff on Twitter, but we do have to have contracts with companies like Red Cloud, some other marketing vendors that we use, which I think people will see going into 2023 who those are. But those contracts, like Crux, we do interviews with Crux, for example. When we market to conferences like we go to the World Nuclear, we go to the PDAC. We did a site tour to our project with some investors over the summer. Those things all add up, and they are all strong return on investment for our shareholders. Each one of those, we believe, adds value, and by telling our story as we do it as best we can to keep the spend down, and we look for ways to maximize the value of the marketing we're doing. Instead of hiring other firms to go out and make big expensive videos for us, we do those all ourselves. Like, we made 75 videos in 2022, published those ourselves, edited those, and we get over 10,000 views per video on those on Twitter. So we believe we're spending shareholders' money very well, and we're getting we believe we have one of the best marketing programs out there, and $280,000 is a very small amount for the value we give to our shareholders.
Fair enough. You sort of alluded to it. What's the plan for promotion into 2023? You've got new partners in mind. You got new conferences that you plan on visiting, and how much have you budgeted for promotion in general? Do you think you're going to spend more this year?
We'll probably be pushing over 300,000 this year, maybe up to 350. There'll be a lot more in-person activities. I'll be on the road a lot with Sean Haliker, our VP of Exploration. We have a number of conferences that will have us mostly in North America, but we will be coming over to Mines and Money in London at the end of November. We'll probably be in New York. We'll be in Toronto. We're going to be starting off November at the Red Cloud Conference in Toronto, and then speaking at the Capital Events Conference in Florida right after that, trying to combine our East Coast trips on one trip. So that'll be a good start. And then as we get into February of next year, we have got drill programs that could start from February and take us all the way through to the end of September. So while Sean is primarily going to be at the drill programs, there'll be times when he joins me. We'll be doing a lot of stuff online, webinars and other in-person conferences, as well as, when we're at the PDAC in Toronto in March, we'll tie into a few other events around that as well.
To put it into perspective, and to be fair, also you've been drilling extensively since you listed. You've ran geophysics, you've ran geochemistry, if I'm not mistaken, and then you did a bunch of other stuff. You're doing your own videos and stuff, as you mentioned. For now, though, for exploration expenses, I saw that you've booked almost $10 million in the last 2 fiscal years. You deferred about $10 million of the expenses. But so far, those haven't yielded much in terms of direct, say, tangible value. The form of a discovery is what I'm saying.
Yeah.
What is what's the plan there, and how do you change that really in 2023?
Well, for one, it depends who you're talking to about success of that drill programs. If you talk to our geologists and talk to people who are experts on the space, they'll tell you the drill core that we're pulling out of Davidson River is exceptional. When you are drilling next to a project the size of NextGen's Arrow project a few kilometers away, discoveries are extremely difficult to make, but you're looking for very specific things, that sort of exploration halo around a high-grade project. And we believe we've gotten into that with our last drill program. If you look at our last news release on that exploration wrap-up, and you look at the drill core that Sean Haliker put out and talked about in videos, you can see that core looks exceptionally exciting. I mean, it looks like high-grade radioactive core that was, very, very high-grade at NextGen that he was pulling out of the ground and comparing it to that. Our geos were shocked that it wasn't highly radioactive, that core that came out. So we believe we're extremely close. The retail market may not understand that. If they don't see a high-grade discovery with big percentage numbers in a news release, they think it's a failure. But that's exactly the opposite of what we're doing. So we believe we're very close. Those institutional investors who invest with us, they know we're close, and they're coming in on each investor round. And it's just a matter of us getting into making that discovery hole. And at that point, the company changes. You look at, NextGen or Fission, when they made their discovery hole on those massive projects, their share price was up 10x or 20x within a year. That's what we're trying to do for our shareholders. Now, there are a lot of other companies around the basin, and there's a new company joining almost every day that can get drill holes that can get you 0.5% or less than 0.5% or up to 1%. those aren't going to be big mines. We are looking to make an arrow discovery on our project, something that is going to be massive, something that is going to really move our share price and really make our shareholders successful.
I did want to talk about Davidson River, and I appreciate you walking me through these things, because as a retail investor, that's exactly what I'm thinking. I'm very, my understanding is just very shallow. If I don't see the percentages, I might get disappointed. My understanding doesn't go as deep yet, so I appreciate you also taking the time to walk me through these things. And so I do want to talk about Davidson River here, because when I looked at the map, I saw that you drilled the same trend and the Warrior trend most extensively during your phase 1 drill program. Yes. And again, from what I could see, nothing came up there in terms of mineralization, but you also put a few holes further to the southwest, I guess it is, into the Bronco trend, as well as was the Thunderbird trend, you call it. And again, nothing too interesting came out of there either in terms of mineralization, yet in your phase 3 drill program, you decided to go in again and do the Bronco and Thunderbird. I think maybe you put one hole in Thunderbird or something along those lines. And they were also rather closely to the holes from the prior program. And that was a little surprising, maybe even confusing to me. Can you maybe also explain that to me?
Sure. So each drill program we've done, the results have gotten better and better. The information we're seeing, the amounts of graphite and structure and fluid movement through our core gets better and better. Once we went from we started off with the Warrior and Saint in our first few drill programs, but we have 4 conductors that we believe are very exciting. But those conductors are 12 kilometers in length. So when you see 2 dots on a small map, they look like they're side by side, but they're literally hundreds of meters apart, if not a kilometer or 2 kilometers apart. So we're actually taking big step outs and hoping to get into some sort of exploration halo around those potential discoveries. And when we did our last program at Thunderbird and Bronco, we actually had 2 of our best drill holes ever on the Davidson River project. So going back into 2023, we're going to be going back to Thunderbird and Bronco again, and really trying to get back into that same region close to where those last holes were that had such promise, that really got our geologists excited. So look, when you look at these 4 conductors, they are massive. A drill hole is this big, an inch and a half wide, and you're putting that in 400 meters down, and chances of hitting something high grade on that first few hole are almost impossible. So look, we have to take all the data from every drill hole, put it into our computer model, use that to help us vector, move around, and get closer and closer. And these discoveries take time. Some companies drill for years and years and never make anything. Some companies hit it in the first couple of years, and we believe the data we're getting is getting us closer and closer. And it's very exciting for our shareholders to be looking at some of the core if they can really understand. And it's our job to explain it better to the shareholders what that core means. And some of our videos, I think we did a really good job of explaining it, Jon did, but not everybody sees that. Some people just see the highlights in a news release that doesn't really excite them. But I can tell you this, going into 2023, that Davidson River drill program is going to be very exciting.
I've seen these videos of Sean. He sort of walks you through the different stones, and it's always interesting to see a geologist really get excited about those stones. But sometimes, as if you have the limited brain capacity that I do, you're sitting at home and you're like, okay, it's rocks. I don't really get it.
Yeah.
Looking at the map, though, the spots that you have left to drill in those in the Thunderbird and Bronco trend, is there enough space? I mean, even if you'd find something over there, wouldn't it be too small to matter in terms of discoveries? Like, did you have enough ground there where you can make a decent discovery?
We have got way more ground than we could ever need. You think about the world's best discovery in the last 10 years, it's NextGen's Arrow discovery, right? That's that's 20 kilometers to our east. I mean, that thing is only a few hundred meters wide, and starts not too far from the surface and goes down about 1 kilometer, 900 meters down. You could be within 20 or 30 meters on either side of that and completely miss it. Okay, so to think about that over a stretch of 12 kilometers long on each of our conductors, there's so much space there. We have no shortage of space. We're not worried about that at all. What we want to do is make that next Arrow 2.0 discovery and have another Arrow project right beside the first one, where they're going to be building a mine and a mill right beside us and all the infrastructure that goes with that. So for us and our shareholders, it's extremely exciting that we could have a project that if we make a discovery on this project, it's not going to be small grade. It's not going to be uneconomic. It is going to be potentially as big as we'd like it to be. Potentially, it could be another Arrow. And that's what we're trying to do, trying to find that Arrow 2.0.
Yeah, it sounds like it's going to take a lot of drilling too. And you're making me think about that's probably not going to be, even if there's something in there, that's probably not going to be one mine. Like it's still too far apart to make an underground tunnel. Like, but yeah, that's for later on.
Yeah, but the shipping it by trucks across 20, 30 kilometers to a mill is so easy. It's not difficult at all. It's not going to be one big mine, no.
Okay. You're still waiting on some assay results, though, from the Davidson River, I think, right?
No. Let's see here. Yeah, the Davidson ones, we've got 90% of them. There should be a last couple coming in over the next week or two. So we wrap that program up at the end of July. It takes about 2 months to get your data back. So we were expecting to have it all by the end of September. It's almost all in. So expect the news release wrapping that up in the next few weeks as well.
Okay, yeah, that's what I was going to ask. When do you think that's going to be coming back? Have you talked? Well, surely you've thought about this, but you've probably also talked about it internally. Inflation is sort of getting out of hand, and for some of the juniors that I've interviewed, that's resulted in their drilling expenses per meter going up 30-40% on some occasions. How much more expensive are your 2023 meters going to be if you had to guess?
I would say we're probably budgeting around 15% on top of what it was last year. Last year, we switched drilling companies. We went to a company called Base Drilling, which is a group that was formed last year. They used to work. Principal of that company used to work in the Athabasca-Basin for another major that we used. Sean used over at NextGen, and we were able to convince him to start a new company in Saskatchewan and drill for us at Davidson River. And by adding his new company, we saved about 30% on drilling last year. So our budget came down. Not only that, they completed their drill program ahead of schedule and under budget. So that was remarkable. Drilling in Davidson River area, that southwest corner of the Athabasca Basin, is extremely technical and difficult drilling. So if you don't have a drilling company that knows what they're doing, has competent staff, you can really blow your budget through the roof and not have good success. So we now have the same company lined up, and they are going to be drilling for us again going into 2023. Not only are Davidson River, but they're going to be drilling for us at Sundog as well, and on our Eastern Basin projects.
You're mentioning those projects, and again, you're sort of making me think. So don't blame me if I faint. I don't, as it's become clear, I don't normally have the brain power for multitasking. But what's the plan for those projects, I guess, is what I'm trying to ask, because you've got plenty of them, definitely for your size of a company. You're in the Eastern Athabasca Basin. You've got something in the northern part of the basin, or right on the edge of it. The one that we're talking about right now, it's sort of right outside on the edge of it as well in the south. And I'm not sure I understand why you need all these projects. Maybe you can talk to me about that and explain to me how you're managing your efforts and your capital around those projects too.
Sure, that's a great question. We get asked that question all the time, and let me explain it to you as simple as I can. When this uranium, market started getting hot again, we were in there years before that, and there were a number of junior companies like ours who, at the time, look, these guys have got geologists who've been in this space for the last 20 or 30 years, and they know, where the good projects are, where the moose pasture is, where projects are with good opportunities, and a lot of the companies that have been around a while acquired all these good projects, and they left the garbage for other companies that may be coming into the space now. The projects we have, we believe, are extremely valuable projects, and we didn't want to just give them away or do JVs on them in their early stages. So Sundog, we were able to, get that drilled for the very first time last winter. We're going to be going back in there this winter, and we believe this winter is going to be a very different program than last winter. Last winter was get up there, be the first company to drill this project in 10 plus years, and work out the infrastructure, get the vendors in place, get the First Nations agreements in place, and figure out how to get it done. We did that last year. So now we've got a really good understanding of how Sundog project's going to work. We're going to go back in February and March and do double the program. With that, we'll get 8 to 10 holes, hopefully 3,000 to 4,000 meters, and be able to get in some very exciting rock in that program. That will add much more value to that project should we wish to JV that out or sell that off in the future. Selling it off as just a A staked project gives you almost zero value to it. You don't get a lot for that. You have to advance these projects a little further to show what could be there, should you wish to do something with it, to bring in a partner to work it, and we can have much more value to our projects for Davidson, for Standard Uranium shareholders. Now, our eastern projects, they're about a year behind where Sundog was. So we saved those projects a few years ago. This last summer, we did all the geophysics. We've got all the permits in place, the First Nations agreements in place, the vendors in place. Those projects are now all set for their next phase, which is to go there and drill those this winter, put some drill holes in, find some hopefully good discovery rocks there, and then be able to use those as more leverage for bringing in partners or JVs, or to be able to gain more value for our shareholders. So look, we've got 5 projects. Davidson River, we have no plans of JVing that out. We strongly believe that is going to be a world-class project down the road, but they take time to explore. So for other projects, we're going to move those, advance them further, and add greater value should we wish to bring in a partner to work on those projects. So for our shareholders, it's very exciting to see those projects get advanced a little further. I'm telling you, it's not easy to acquire projects, get the permitting, get the First Nations agreements in place, get the logistics, get the vendors. All that lined up takes a lot of time, relationships, effort, and capital. We've done that with all 5 of our projects now. So it's a great opportunity for shareholders to see what we've done and where we're going into 2023.
Yeah, that Sundog JUR program last March was actually rather short. You know, if you look at the news release, it was like it took about 7-8 days that you drilled it for. Or you did 4 holes.
No, it was about a month, actually, 4 weeks.
Because okay, I thought the news release was almost like a few days apart. Like you started and then you announced that you finished it. I must have done something wrong with the dates there, but it was like you did 4 holes in total, I guess, in places where there were no historic drill holes. That's something that I was sort of concerned about before you went in. I thought that, you know, maybe some re-drilling of historical holes was going to happen. But you didn't do that, so that was I welcomed that.
Yeah, that's a different strategy. I mean, a lot of companies that just want to have a news release where they can show they've got some numbers, they do that. We're not looking to do that. We're looking to make discoveries for our shareholders, high-grade potential economic mines is what we're looking for. So we've got some targets. We've got the geophysics. We've got previous drill holes we've looked at in that region, but we've got some interesting ideas of what that Sundog project can be. Now, you've only got about 5 weeks, 5 to 6 weeks when you can get up there and get out, because you have to go on an ice road. So the government builds Lake Athabasca is a massive lake, almost like a small ocean. It freezes in the winter, and then the government builds an ice road from one side to the other, and then we build a branch off that to get to our project. We've got a very limited amount of time in the winter of about 5 or 6 weeks, depending on the weather. So you've got to get in, get your drilling done, and get out before the ice road melts. So this year we're going back. Now that we've got the logistics worked out, we're going back with twice as many drillers and drills, and we're going to be able to have everything done over that same 5 or 6 weeks to get twice as much of a drill program done. So we're very excited to go back. We've got a lot of information we've gained from the last program, and we've got some exciting drill targets. So we can't wait to be up drilling again at Sundog.
Well, maybe you can help me understand why you're excited, because the project has been drilled before. So why do you think you can find something there where your predecessors didn't? Like, are you going deeper, drilling in a different direction? Do you have more data? What can you tell me about it?
So if you go back in time, that Uranium City Sundog area was known as Beaver Lodge style area. So all those mines that were built up there, and they mined it from 1950 right up until 1980. They were drilling low grade at surface mines. So open pit stuff that was very low grade. Now, when I say low grade, 0.5% up to 1%. That was all Beaver Lodge style. And they didn't drill below, a couple hundred meters. Everything was just at surface. What we believe is there is an opportunity to go much deeper and look for the source of where that uranium came from. We're looking for not only the Beaver Lodge, but at the unconformity and then deep in the basement as well. So we believe we're going to be the first companies to drill this one really deep into 400 meters, 500 meters down, where we believe there is an opportunity to make the type of discovery that you have across the Athabasca-Basin, which is the high grade basement hosted, uranium that could be economic to build a mine up there in that region again. That region has been left almost to die since 1980. The whole town that was once 5,000 people is down to less than 100. But they've got an airport, they've got infrastructure there, and it's ripe for an opportunity. And there's many other uranium companies going up there right now and staking ground and starting to get projects started up there. So that area is going to be revitalized again, and we're on the forefront of that. And we believe we're going to have something very exciting for our shareholders in the near future.
Do you Is it like, is the geology around those projects, the 5 projects that you have, is it comparable? Because they're really far off from each other. Is it like, can you compare the geology?
All 5 projects are different. Well, the 3 on the eastern side of the basin are similar. I mean, that is more just outside the basin as well, over just close to where the ISO's hurricane project, and just north of MacArthur River. That's sort of a similar type of geology over there. The Southwest Davidson River, that is, we're looking for basement hosted purely. And that's very similar to what NextGen's Arrow project is. And then up at the Sundog, once again, that is Beaver Lodge at surface. And then you've got the unconformity and then the basement as well, which nobody's found up there before. Well, we're searching for.
So how do you manage those different types of geologies and thesis with one team? Like, do you have the brain power to know what to do with all these, I guess, 3 different sorts of projects?
We do. I mean, they're all uranium projects. They're all geology from Saskatchewan. All our geologists are Saskatchewan-based geos. Our lead VP of exploration, Sean Haliker, very brilliant geologist. If you've ever heard him speak, he's cut his, right out of university, he went to work for NextGen. He started there right at the discovery time, and he wrote the paper on the economic geology of that Arrow project. He's published on that. He's the only one to do that from all of NextGen. And he knows that geology very well as the geology from around the Athabasca-Basin as well. So we've also hired geologists from Orano, from Denison, from NextGen. We've got 5 geologists on our staff that are all very talented uranium geologists. And between them and our peers in the area, it's not that difficult to look and understand what we're doing up there. So we're pretty happy. We're recognized as one of the most strongest juniors exploration team. We're pretty proud of that.
What do you think are the main geological risks and challenges that you're expecting to be faced with in finding these NextGen like deposits?
So when I think about what our challenges are as a junior exploration company, number one, you have to have the money to move things forward, or else you go nowhere. So when the markets, macro markets, that is, in the stock markets, are having terrible few months, investors get freaked out. Money goes away, and it's hard to raise money. So, but that's the number one risk the CEO is always facing: making sure your team has money to move the company forward. So we've got that well in hand. As we talked about earlier, raising money, you're not always going to time the market perfect, and sometimes you have to raise at a lower valuation than you'd like to. But you've got to make sure your company's got money to move the company forward. Number two, political risk. Saskatchewan is a wonderful place to operate. The government is very supportive. The people of Saskatchewan are very supportive of mining. And number three, First Nations. If you don't have First Nations support, you're hooped. Now, I can tell you very strongly, we've got great relationships with our First Nations partners. All our projects are permitted to go forward. All our agreements are in place. We've got strong relationships with the chiefs and with the governing bodies in those regions that are very value and use Standard Uranium as a model of how companies should do things. And we're very proud of that reputation. On top of that, you have to have vendors. If you can't find a good drill company to drill your programs that know what they're doing, you're in a lot of trouble, and you're going to spend way too much money and not get good results. You have to have helicopter companies. You have to have first aid companies. You have to have camps to stay in. You have to have fuel. You have to have all the supplies. And these things are challenging to get worked out. And we've been working very hard at that for 5 years, and all those relationships are in place. What else? Staff. If you don't have good quality staff, you're in a lot of trouble as well. We've attracted high quality geologists to join our team, and we've got a wait list of geologists that want to join us. When we're big enough that we can hire more. So we've got a great exploration team of geologists and people that want to join us, and we're very strong on that front. What else do you have to be worried about? Your banking relationships and your stockbroker relationships and your investor relationships. Institutional fund managers that you've got to know and be able to go to and explain why your share price is not where it needs to be, and have them understand that and still be supportive. So all those things sort of keep a CEO up at night and keep them wondering, how we're going to move this company forward and have success for our shareholders. And those things continually need to be developed and worked on. And I think we're doing a very good job on those things. And the share price will start to reflect that as we go into 2023.
Let's hope that's true. Let's hope that's true. Do you think the uranium market will be kinder to you and those capital raising capabilities that you mentioned here from here on?
I do. I think for one thing, we're in the middle of a capital raise right now. We just announced we closed the first half of our first tranche, and not only did we close it, we're upsizing it, taking a bit more money to be able to continue driving this company forward. Not many companies, and not very many companies, are raising money right now and haven't been able to because it's very difficult. As we go into 2023, we start our drill programs in February. We're going to be exciting times for our shareholders because we're going to have drill programs going potentially for 9 straight months. That'll be constant news flow, constant marketing, constant information, and potential discoveries at any one of those days. You know, when we're drilling, any drill hole could be the discovery hole, and that is something that shareholders have to be very wary of, very aware of when we're drilling, which is exciting.
Jon, I really hope you're right here, and I know you almost have to run here, so let's I'll let you go here. What did you think of the conversation, and what did you did I forget to ask you something? Was there something that you wanted to talk about but I failed to bring up? What did you think?
No, I think, look, I think you asked some very straightforward, honest questions that you wanted to get to the bottom of why we're performing with our share price the way we are. Outside of where the share price is, I think our company is driving forward very well. And it's hard for an outside retail investor to see that when all they look at is the chart on the board. But when you get to take the time to speak to our management team, speak to our geologists, really get in-depth understanding of where our projects are heading, the future is very bright for Standard Uranium. And I know heading into the fall or the start of 2023, those drill programs starting up again, if I was a shareholder, I'd be very excited. And I am a large shareholder.